Welcome to Trading Price Action, and in particular, inside bars. So in this module we'll address what an inside bar is, how we can use them to our advantage, and when we use them to our advantage, more crucially. So an inside bar chiefly is a bar of indecision. It is basically when buyers and sellers have failed to take out the previous day's range, or high and low, and on an open high low close chart it will look like something like this, where we have the engulfing seller bar followed by the buyer bar. It doesn't matter about color, by the way, it just happens to be this way round, a seller bar followed by a buyer bar, and essentially the buyer bar has failed to take out the previous day's range, as we can see here. Similarly, on the candlesticks, I don't know if you use candlesticks, it doesn't really matter, it looks exactly the same, where you've got the engulfing bar followed by the inside bar inside the previous day. For example, if you look at the daily chart, or if you look at the hourly, it would be the previous hour's range. The present one, or the most recent one, will be inside that range, having failed to take out the previous bar's high or low. As we just mentioned, it doesn't matter about color. It could be a seller bar followed by an inside buyer bar, or it could be an engulfing buyer bar followed by an inside seller bar. We're not really interested in trading these, by the way, unless they're at a technical level, and we'll discuss a little bit more about this later on. So, by the same token, it doesn't have to be a seller bar followed by a buyer bar. It could take on the form of a buyer bar followed by an inside seller bar, where again, we have the failure of the present bar to take out the previous bar's high or low, reflecting indecision or the transfer of power between buyers and sellers if we're at a technical level. And certainly we can take advantage of this, providing we're at a technical level only. So why do we use them? Well, a number of reasons actually. Not only do they reflect indecision, at a technical level, they signal to us that there's a transfer of power between sellers and buyers if we're looking to go long, or a difference between buyers and sellers if we're looking to go short. They give us a very good heads up, enabling us to enter trades at a very efficient price. Again, at the start of the move, we can also trade them in trending markets as well as trendless markets. And that's very useful. It gives us versatility, especially when markets only trend 25% of the time. That's very important. So we can essentially buy the dip and sell the rally if we're in a downward trend. When I say buy the dip, I mean if we're uptrending, making higher highs and higher lows, and selling the rally in a downward trend. So we've got these couple of examples here. Let's take Euro-Aussie, this cross-currency pair, which is very overlooked actually. And we've got here a technical level, a previously tested level of support which is broken, and now it's come back to test as resistance. And you can see that the buyer bar leading into the technical level has closed, or is followed by, an inside seller bar. It just so happens to be a high test bar. And we can basically trade off the back of that. We can take the break of the low and trade the continuation of the overall downward trend, which I'll show you now. So while we can see, getting the bigger picture here on Euro-Aussie, we can see that this old support level has broken and has now come up to test as resistance, correlates with a big number, 1300, and as we've got an inside bar here, after a couple of buyer bars, it's a sign to us at this key technical level that the tide between buyers and sellers is starting to change in favor of the sellers. So we can trade this inside bar as an inside bar break. In this instance, what we'll be looking to do is sell at the break of the low and have our stop loss above the high. Let's see how this did. And these are the kind of moves which you look out for with Lazy Trader. Take it all the way down to the previous swing low, or just in advance to be precise. Fabulous reward to risk, with minimal effort. That's what we like. And this was the example of trading an inside bar with cyclicity, and trading with the trend. How about in trendless markets when you've just got a ranging market? Well, there's still opportunities there. This is the case of CAD Swiss, a very underrated cross-currency pair. And we've got, given that you've got the logic that if we've got a well-established range, we can either buy the bottom of the range and sell the top. In this instance, we've got an inside buyer bar to be precise, after a succession of seller bars. So with that in mind, we can essentially say to ourselves, well, it's an inside bar, so there's indecision after the decision to sell into the level. It's a buyer bar, so we could see that there's a transfer of power between sellers and buyers. And as it's at the bottom of this range, at this technical level, then you could reasonably expect the market to go long thereafter. And we could trade this by simply placing an order above the high of the inside buyer bar with our stop loss just below the low. And depending on whether you want a high probability low reward trade by taking it to the middle versus if you wanted a slightly lower probability trade with a higher reward and taking it to the top, it's entirely up to you. So let's take a look to see how we did if we were to trade such a move. So you'd have hit target if you went for your high probability low reward targets by targeting the middle of the range, accepting a lower reward for a higher probability. But did it go on to hit the full target for people who'd rather have a higher reward but a lower probability of it hitting that? No, it didn't, unfortunately. However, you would have got out of that at break even if you were targeting the slightly more aggressive target. So this is just two examples of how you can trade inside bar breaks and appreciate what inside bars in context. So we can use them whenever we've got a trending market or a ranging market. It doesn't really matter, providing we are at a technical level, it's fine. And of course, by technical levels, what do we mean? Well, essentially levels of support and resistance, hard or soft, trend lines, moving averages, Fibonacci levels, monthly or weekly pivots, or big numbers.